welcome to NDTV Profit. I'm Hiral Dadia and with me is Mahima Vacharajani. You are watching Ask Profit. Let's quickly take a look at what the markets are doing as we speak right now. Clearly, there is some bit of pressure. Right now, we're seeing cuts of almost around 0.8% in terms of Nifty 50. Bank Nifty again taking the pressure and the hit as we speak right now. Overall, let's quickly look at the other sectors. If we can just get a sectoral heat map to understand what's going on in today's session, which are the sectors which are taking a beating. Overall, it's real estate, IT, which is holding on in today's session. PSU Bank Index, major cuts coming in there, 3 to 4% lower there. Energy is down in trade, metals taking a beating, media, oil and gas, as well as infra. These are a few of the sectors which are down and about. Overall, let's pull up the mid-cap and the small-cap index as well in today's session because that's where the action is. If you see mid-cap 150, down 0.2%. Small-cap index as well, that's again in focus. Excuse me. You have mid-cap 150, 0.2%, small-cap 250, down almost 0.4%. And in terms of stock-specific action, the counters that are actually leading gains in today's session, Power Grid, that's one of the counters in today's day of trade, which is up in trade. Hindalco, Axis Bank, Ultratech Cement, as well as Grasim up in today's session. SBI down in trade, Adani Enterprises, Ports, Indicon Bank and Britannia. So it's the PSU pack also which is putting that kind of pressure. If you see in terms of broader markets, few of the counters which are actually buzzing in trade today is a Suzlon. That's on the back of a brokerage note. That stock was up in trade as we started off the day. There you go, at the day's highest levels as we speak. Apart from a Suzlon, in terms of other names, you have a Dr. Reddy's, which is in focus as well in today's session. Amber is up in about 6.5%. VIP Industries, Concord Bio, Nalco are a few of the gainers. On the losing end, as we already mentioned about Dr. Reddy's, PSP Projects is another stock that has been trading under pressure, Mahima.
Absolutely. So PSP Projects is facing pressure, and this is because Adani Infra is set to buy 30% stake in PSP Projects for around 685 crore. Now, the promoter and family owns around 60%. So this will trigger an open offer going forward for around 1.03 crore shares, and this will be at 642 per share. Now, why the stock is seeing pressure? Because the deal at which PSP Project is set to be bought is at a 15% discount, but the open offer price is at a 4% discount. Now, lock-in period is for 5 years on the sale of existing stake. And what does this mean for the management overall? Well, existing management will continue. Adani to have equal representation in the board as a joint controller, and PSP order book as of 30th of September 2024 stood at around 6,546 crore. So this is the major reason why PSP Projects is buzzing in trade today, and it is seen a dip of around 7% as we speak. However, it has come off from its day's lows, currently trading around 7.5% down here.
Right, so that's with regards to what's happening in terms of where the markets are concerned as we speak. But clearly, it's going to be interesting to see how the other stocks pan out, what the queries are looking like as well in today's session, Mahima.
And to move on, to address the viewers' query, viewers, you can ask all your stock-related queries, whether they're fundamental or technical, on the number that is flashing on your screen or any other social media platform of NDTV Profit. To take your queries, today we are joined by Sameer Dalal of Nataravalal & Sons Stockbrokers and Kush Bora, founder of kushbora.com. Welcome to both of you, gentlemen. I'll come to you, Sameer, first on PSP Projects. Your view on this entire acquisition?
So the acquisition is good for the Adani Group, right? They have a lot of interest in the construction space, and especially if you look at the real estate development that they're going to be doing in Dharavi. So PSP will fit in very well with them in the sense that all the actual work that needs to be done can be taken care of by PSP. So PSP, as shareholder, gets the benefit that they get order flow from the parent company, which will happen. Of course, it will happen on a tender basis, but given the fact that the Adanis own it, they obviously know what the cost of construction for that project would be and how they can price it, and they will obviously be getting good stream of flows of orders from there. So you can expect the company to grow at a decent pace going forward. So I think overall, I think in the fit of for Adani, this was a backward integration that they required. And for PSP, it's good because they get good order visibility going forward. So overall, I think it's a good deal. Pricing can be, discussed a little bit, but I guess when you're taking controlling stake, you sometimes do pay a premium pricing, which I think Adani has paid, but that's fine. Like I said, overall, I think the value for Adani will also improve over time. So overall, it's a good deal.
All right, so that's the view coming in on PSP projects. We'll start with our queries. The first query is from Varada, and she wants to know whether this is the right time to enter DLF. Kush, I'll come to you on this one. DLF, do you think it's the right time?
Hi, first, a very good morning. Well, there is a possibility that the trade could see a bit of a rebound. There is a base formation attempt at the 745, 750 level. Even for the day, if you see the low is close to those levels. So I think if you're in for this from a 3 to 6 month perspective, then perhaps your stop loss will come close to the 745 mark, and on the way up you're looking at target of 810, and once that is taken out, perhaps even an 845. So DLF from a 3 to 6 months perspective, yes. Immediately, as is the case with most of the market, the stock could also remain under pressure, perhaps even sideways.
That's with regards to DLF. Moving on, the next query is coming in from Surya from Bangalore. And the query is with regards to gas stocks, two counters, GAIL as well as GSPL. Surya would like to know whether, it is a good hold from a long-term perspective or not. Samir, what's your view on GAIL as well as the GSPL?
So GSPL, no coverage. On GAIL, we continue to remain constructive. I'll tell you what. Look, the opportunity for GAIL still remains quite large because we believe that the city gas distribution businesses, of course, that they own will take a hit, but their holding value will take a hit. But overall, we believe the growth of the gas distribution within the country is only going to set to increase, which will mean that they will be able to utilize some of their pipelines, which are running at slightly lower utilization rates at a better rate. As that happens, you will see the operational leverage kick through and the profitability for the overall business also continue to grow. So yes, GAIL does have certain amount of restriction on pricing, certain amount of ROEs that they can generate and things like that. But we believe that where it is currently priced, I think there is upside. We've seen a decent correction. So I would say hold on. If anything, you can add on to some of GAIL, GSPL, no coverage.
All right. Moving on, the next query is from Mayank, who's from Bangalore. He wanted to know a long-term view on metro brands. He's saying it's overvalued and difficult to make 20% CAGR returns in the long-term perspective. That's his question. So, Samir, I'll stick with you for this one. Should he invest or ignore as of now because of the high valuations is his question.
The valuations for metro brands looks high optically because growth in the business has not come through. Now, these are businesses with very high operating leverage. When you've seen that the rural side and you see the consumption side, especially the discretionary side slowing down, the top line and the margins take a decent hit because all my costs in this business model are more or less fixed, in the sense that I have rent costs, I have electricity costs, I have staff costs. A lot of that at the store level is all fixed. Now, once we see the discretionary spends come back and we see the same store sales growth for a metro brand starting to go up, what will happen is you'll see a great operating leverage play out and the valuations will optically not look as expensive as they are at the present moment. So a lot of this play, I believe, is slightly longer term in nature. I believe metro brands have seen a decent corrections over a period of time. They have good brands. They're continuously expanding their presence, whether it comes to new products, new brands, reach through number of stores added. All of those, I think, will start seeing good fruit over the next year and a half. So I believe it's actually a good buying opportunity, and one should ignore the fact that on the historical trailing basis, the valuations look expensive. Like I explained, it's an optical thing which can change very quickly for all of these places where discretionary spend is placed.
Right. So, yes, a good buy coming in with regards to metro brands from Samir. Moving on, REC, that's a question coming in from Ishant from Rajasthan. He has bought 400 shares at 550 rupees. Kush, this question would pertain to you. Should he hold, sell, or average it out right now?
So, as Mahima would be smiling next to you, not a big fan of averaging. She's heard that before. I wouldn't recommend averaging because the markets are in a bit of a tizzy. The stock is too, and if you see today, even today when the stock is down, the volumes are actually shot up. my suggestion would be to continue to hold. We're seeing some positive divergences, and there could be a possibility that from the near-term perspective, at least, that the selling could be coming to at least a near-term end. Now, here too, the view will be positioned anywhere from 3 to 6 months. It's a bit of a stretch that the stock could reach closer to 550 levels or maybe in a profit. But any kind of a bounce from here should actually be taken as an opportunity to exit. A positional stop on this one comes close to 460 kind of levels. If that is breached, then you should exit the stock immediately.
Right. The next query is from Fatima from Bangalore. She's holding Railtel. Total number of shares that she's holding is 82 at a price of 538. The stock is currently trading at 594. So she's incurring a loss of around 14,000. And she wants to know whether she should keep holding it or exit, because she's saying the stock is falling every day now. Your view on this, Kush?
So see, if it's a positional trade, or rather if it's if it was taken from a trading perspective and she's in a loss, then not a bad idea to consider an exit. However, what I can suggest is that the stock is close to the near-term support zone of, or rather the medium-term support zone of 350, and the volumes, amongst a lot of stocks, especially the railway ones, have actually been thinning on the way down, suggesting that there could be end of a supply pressure at least for the near term. So from a stop loss of 350, hold on to this one. I'm not expecting a big move in the sense that she'll be in profits again. But here too, like in the previous question or in the previous case, she could exit closer to 400, then perhaps 430 levels, thus reducing whatever losses she holds right now.
Right, so that's with regards to Railtel. I hope that query is responded to as well. Moving on, Zen Technologies, that's another stock where a query has come in from Raghuram Patro of Bhubaneswar. He has 100 shares of Zen Technologies at 1,700 rupees. Currently, the stock is trading at 1,781. From a fundamental perspective, Samir, how are you looking at this space and what would you advise to do with a Zen? Because we've seen, I mean, from 1,700 to 1,780 is where it's now come up. The stock is up nearly around little over 100% on a YTD basis as well.
So last week also when I was on your show with Kush only, I said I don't track Zen Technologies. So back over to you, Kush.
Yeah. Kush, how does Zen Tech look to you on the charts now?
No, I'm quite happy to take this one. After a series of stocks which have actually been rogered, left, right, and center, this is one that is still holding ground. And my view is the same as last week. Continue holding on to this one. Even in a market like this, at best, what this stock is doing is actually consolidating. Medium-term support zones are 1,600 to 1,650. So as long as that level is held, I think the stock should hold in good stead. I think on the upside, the near-term top of 1950 should be your immediate target. Once that is taken out, perhaps 2100 as well. So this looks like a shining beacon, for now in a market like this. So till 1600 is held, continue holding on to Zen.
Right. So continue holding for Zentech from Kush. The next question is from Arun, who's from Hyderabad. He has a question on Jyoti Labs. He's bought around 100 shares at 562 a piece. The stock is currently trading at 403. So he's seeing some losses, around 15,000 rupees of losses. Samir, do you think he should continue holding Jyoti Labs or he should sell it at this levels?
No, I think he can continue to hold Jyoti Labs. So look, the business model is not, I mean, they're doing quite well. Overall, yes, we've seen a correction in the stock. Where we find a little difficulty is the valuations, right? So if you look at it, it's trading at about 40 times trailing and maybe 34, 35 times forward earnings 1 year. That is 6 months forward. So on the valuations, a little bit pricey. But given the fact that we believe that growth will continue for this company, one can continue to hold. We do have an internal target of about 460, 470 on it, so hold up to that.
Right. That's with regards to Jyoti Labs. Samir, staying with you with NTPC Green Energy IPO. The query is coming in from Vishaka from Bangalore, whether she should subscribe to NTPC Green or not, because one, the valuations are expensive. And number two, currently also if you go to see subscribed 48% on day two where retailers are leading. So is the risk reward favorable for Vishaka?
So, we haven't studied it in great detail to give you whether one should apply, but given the fact that the renewable energy space in India is something that's going to continue to see an uptake, and given this kind of business model where it's all upfront capital requirement, and then, the operating margins are quite large because there's really no cost for running these plants, right? It's just the maintenance of these solar panels or the wind turbines and all of that. So there's very limited cost that goes into it. So what you will see is good cash flows going forward. So from that point of view, we like the overall business model of people setting up the renewable energy space, especially NTPC, and NTPC being a government entity will definitely get some of the safety nets in place. So one can probably subscribe. And coming to the second point which you discussed, that only retail has, but we've always seen a lot of these larger issues. It's usually on the last day of the issue that the QIP comes in and make sure that the issue sails through. So I believe that will happen in NTPC as well. Will you get a trading pop? I mean, a listing pop? That I do not have an answer for at this point.
All right. Moving on, the next query is from Sriram, who's from Chennai. Now, he wants a long-term outlook on HUL as well as Infosys, and he is also asking that he has around 10 lakh rupees and he wants to invest these 10 lakh rupees from a 2-year perspective. Samir, I'll stick with you for this one. Your view on HUL as well as Infosys, and if he wants to invest 10 lakh, which is a chunky sum of amount, where should he put this money?
So, 10 lakhs is a great sum of investment to make. And I'll give you a few stocks once we finish discussing HUL and the other one, I forget the name. Anyway, so Lever, where the problem lies, I think, is the fact that we are seeing a bit of a slowdown in urban consumption. So the stock has seen a correction from about 3,000 bucks all the way down to 2,400. And simply because what we've seen is the volume growth has been lacking. And secondly, what we've also seen is some amount of margin compression because of increasing costing of food products. So we believe that HUL is a company that will be able to pass on the brands that they hold are very strong in nature, and they will be able to ensure that the growth happens for their business as well as the profitability going forward. Only again, like I said, valuations a little expensive, so corrections are great times. I would love to say if the stock came to 1,800, it would be a buy, but I don't see that ever happening. So if it comes closer to 2,100, 2,200 levels, I would definitely advise one to go long. Which was the second stock that you had asked the question on?
Infosys.
Infosys, IT sector, we've been saying for some time that we find valuations expensive given the fact that growth is not picking up in a drastic way. In fact, now we have another problem with Donald Trump coming into power. What he's going to do is probably put some amount of taxes on certain services also that come from overseas, and India could get impacted because of that. Or he could make sure that they have to hire more people within the domestic, if to service the US market, hire more people within the US, which could push costs up. Valuation discomfort exists, so I would not be looking to buy. Now, having said all that, if somebody wants to invest 10 lakhs, I think if somebody is willing to split it up into 5 companies, that would be a great way to go about it. Last week also, we discussed my top pick in the space is in HDFC Bank. I believe that is one of the counters that can do extremely well. And if India has to grow, the financing sector has to do well. The second stock that one can look at is a Tata Motors, if you ask me. Simply put, I believe the electric vehicle penetration in India will only keep increasing. Tata Motors does have an edge. Their car product profile is quite good. We think that the stock is corrected from 1,200 to about 800 or levels, a little under 800 actually. That could probably warrant a good buying opportunity. Then I would, like I said, the financing space is something that I would like to have a little bit of overweight because India has to do well, that financing sector has to do well. So another company in the mid-cap banking that we would recommend is IDFC First Bank. Again, we believe that that is a great growth story. They have a great business for lending, for discretionary spend, for consumption. They're growing their book. They're able to grow the deposits faster than everybody else. And deposits in this kind of situation when the market is in requirement, I think that is something that will do well. Another stock he could invest in is Larsen and Toubro, since it's a large cap. And we believe the India infrastructure story for the next 10 years is still going to see a great amount of growth. So that is something that one can look at. And the fifth stock that somebody could probably look at again is something in the discretionary spend in India. For that, I would suggest an ITC where, although the cigarette business is not growing at the greatest of pace, we believe that the growth out there will remain decent. We believe the FMCG business will start seeing good uptake over a period of time, which will allow them to grow their operating leverage in that business and the profitability and re-rate on the margins still cheaper than most of the FMCG players in the country. and you get the hotel business, which will get demerged. So you kind of get a little bit of exposure to that also, which is another way of playing discretion. So these are the 5 stocks I would suggest breaking the 10 lakh up into.
Right, thanks Amir for that. But let's quickly just address what's happening with the Indian rupee. That's weakened to an all-time low right now. Now the pressure, yes, coming in from the foreign outflows that we have been witnessing from the domestic markets. We are seeing some renewed strength in the dollar as well, and that's one of the reasons why we are seeing this kind of a move on the rupee. The hopes of the aggressive rate cuts by the U.S. Federal Reserve, that has been trimmed as well, and that is what is giving this kind of strength to the dollar index overall. But clearly, if you see the rupee 84.45 against the dollar, that's where it is at right now as we speak. But moving on, let's quickly take the next query. That's with regards to NLC. The stock has been in focus in today's session as well, and this is on the back of the expansion plans that they have cited so far. They've clearly said that they would be investing up to 3,720 crores in their renewable arm. Now, Kush, I'll come to you on this one because the question is from Rajiv from Gurgaon. Now, he is holding 1,400 units of NLC and he's bought it at 90 rupees. Is this a good time to book profits, or should he still stay long on it?
Well, with that purchase value, I'm assuming that the holding period has been, over a year or maybe a little under it. Then in that case, I don't think this is a good time to, book profits or perhaps even exit. Because, structurally from a medium-term perspective, if you see, I think the stock's only corrected because of the market correction. Now, why is that important? Which it shows that the stock inherently doesn't have, all that great a weakness. It's only, along with the markets. As long as markets stabilize, or as and when markets stabilize, the stock will perhaps be one of the, quicker ones to rebound. So I don't think from that perspective you need to worry. But in case cash is something that you want urgently, or maybe it's a requirement, then perhaps keep a stop loss at 225, 230 kind of medium term support zones. If those are broken, then you might want to exit. It'll be a slightly lesser profit, but a profit nonetheless. So 225 is the level that I'm looking for. If you can continue to hold on, but if it breaches 225 from a near term perspective, might as well book out and then buy it at lower levels of closer to 200.
And he's actually sitting at a significant profit of 2 lakh rupees. So kudos to that. Moving on, the next query is from Bangalore by Venkata Ramani. She's holding KPIT shares at 1600 a piece, and she's holding around 190 shares, and she wants to know whether she can keep holding it or sell for the next 12 months. Kush, I'll stick with you for this one.
Well, slightly tricky because before this fall came about, that sharp one, the stock was actually doing well. Even now, I don't think the stock's actually seen the last of the falls, especially if you go by the volumes and the momentum indicators on the downside. So perhaps consider exiting right now. Might be a painful decision. It's in a bit of a loss right now, but exit currently. As in when the stock approaches lower territories and shows any kind of stability is when you might want to consider re-entering. But at the moment, the downward pressure seems that it might persist for some time.
Right, so that's with regards to KPIT Tech. Overall, another question coming in from Balwant Modi from Rajkot is, what could be good entry levels with regards to Zen Technologies from a long-term perspective? If you look at Keynes as well, EMS, that segment has been in focus. Stock is seeing some marginal gains trading at the day's highest levels, but it is a multi-bagger in the making. 120% is the kind of gains that we've seen this year. Kush, your view on a Keynes?
Incidental that just this morning on our advisory service we've released a buy call on Kane. So I mean that gives you a sense of my view. The targets that we put out on this one are 5950 and 6100, and 5600 is the stop loss from a medium term perspective. But I think if you ask me, overall the structure is fairly decent. Has a fair share of volatility, but the 50-day moving average does come into its rescue, and the stock kind of rebounds from there. So all in all, fairly positive on Keynes, and from at least a near to a medium term perspective, for targets of 6100, continue holding Keynes. Your stop loss comes in at 5600 or just below that.
All right. The next query is from Prabhat, who's from Bihar. He wants a view on PNB. The average price of his buying is around 68, and he has 4,000 shares in his portfolio of PNB and sitting on a profit of roughly 1 lakh rupees. He wants to know whether he should book profit or hold going forward? Sameer, your view on PNB?
I think he can go on and hold PNB at this point of time. We've seen the stock coming off a bit. Also, the today, if all PSUs are down because probably the government, Nirmala Sitharaman's comments on where banks should probably restrict selling of insurance products. I guess some amount of profitability, a good amount of profitability that comes from that business can get affected if certain restrictions are put in place. But I highly doubt it would happen. At the end of the day, everybody is allowed to sell a certain product. It's just that they want to stop the mis-selling. So maybe banks will have to clamp down on that part, that angle, and allow only certain products to be sold in a particular way. But that will still mean that these businesses will continue to remain profitable. A lot of the PSU banking has gone through a lot of pain of writing off bad debts and cleaning up their books. Of course, there is going to be a little bit more of pain given the microfinance sector is seeing a bit of pain. And I'm sure the PSU banks also have some amount of exposure there. Not directly, but through some way or the other, and that could lead to a certain amount of increase in NPS. But net, we remain very constructive. Like I said, on the finance space, in the private sector banking, PSU banking, also we are quite constructive. Like I said, valuations are much cheaper. Risk reward is more in favor, and the growth for the financing space is only going to keep increasing over a period of time. So stay investment period.
Now, staying with the banking space, you have the next query, which is in for a Maharashtra bank. You have Beyant Kumar from Rajasthan, who's holding 10,000 shares at 65 rupees. Sameer, I'll stay with you on this one, taking your views of, the PSUs into consideration as well. What is your view on Maharashtra bank? What would you advise?
So Bank of Maharashtra is also a good bank at the end of the day, but it's not our top pick in the space. It has more of a focus in the western region. We prefer to have more banks which have more of a. I'm not saying Maharashtra Bank is only western, but they have more of a focus there. We prefer banks which have more of a pan-India kind of presence. And if you want to be in the PSU banking space, I think Bank of Baroda, which is our top pick, has seen a decent correction today. The stock is down to 223. I would advise selling Bank of Maharashtra and getting into a Bank of Baroda at this point.
Right, so exit a Bank of Maharashtra and get into a Bank of Baroda. That's the view coming in on that one. The next query is for the likes of a Inox Wind. That stock is under pressure in today's session. Saurav from Jaipur has a query. Kush, for you, is it a good price level entry with regards to Inox Wind?
So I'd hold up on that purchase just yet, and the reason for that being that the 173, 175 mark is the 200-day moving average, very close to that, approaching those levels. If it does get tested and if it rebounds from there, then perhaps it'll make sense. It'll make sense to enter at those levels. But if it's breached, then you're looking at lower levels of perhaps even 160, thereabouts. So hold up on that. The base formation attempt close to the 185 mark is not really as sustainable. So I would hold up for some time, perhaps give it a day or two. On the upside, however, if the stock manages to cross 195, then from a near-term perspective, you'll see this base formation attempt complete, and perhaps even a rebound close to 220 levels. So my suggestion would be to wait and buy if actually 195 is taken out on the upside. That's where the medium-term or the near-term resistance comes.
All right, the next question is from Ananda, who's from Bangalore, and they want a long-term perspective on Indicon Bank. Sameer, your view on Indicon Bank?
So today we have a lot of banking questions. It's a good thing. We have a lot of coverage on that. So I remain constructive on Indicon Bank, right? So where has Indicon Bank faltered? Indicon Bank has, when they bought Bharat Financial, which was the erstwhile microfinance business, they have got now a decent sized exposure there. Because of the slowdown that's happening in the MFI space, you see, they have also had to cut down their book, and because of which their higher yielding interest income loans have come off, which has led to NIM compression. Plus, at the same time, they've taken provisions for in case certain of these MFI loans turn negative. So it's been a double whammy that they faced in the current quarter. And the talk in the market is that the MFI space is going to go through a period of 6 months of pain before we start seeing an uptake. But I do believe that the microfinance industry is here to stay. It is something that will come back to growth. The financial institutions lending there, including IndusInd Bank will have to be more cautious. Let me also put in one caveat that IndusInd Bank has been very particular in who they lend to. They make sure that they don't have anybody who they lend to who has more than 3 loans. It may happen that someone's picked up a fourth loan after IndusInd Bank has given the loan, but they've been very particular in ensuring that they are not giving loans to already over-leveraged borrowers. So I believe that IndusInd Bank will have a little bit of a period of consolidation right now. The stock has probably overcorrected. They're not purely an MFI bank. They have exposure to vehicle finance, to home loans, to all of the other businesses which will grow. And we believe the microfinance will come back. So this is a great buying opportunity in IndusInd Bank. You don't get a good quality bank with decent size and these kind of valuation. I would stick my neck out and say, go ahead and buy the bank.
Go ahead and buy the bank. That's the view coming in on an IndusInd Bank. But let's quickly pull up all the telecom counters on the screens. Vodafone India, Bharti, Airtel, and you have a Reliance Industries. All the three, interestingly, have lost subscribers. That's the September data that has come in so far. And it's the third consecutive row where BSNL has been gaining subscribers. They've seen a net addition for a third straight month. Vodafone Idea, again, 2.5% is the kind of downtick that we're seeing in today's day of trade. Let's pull up Reliance Industries as well as Bharti Airtel and see what these two counters are doing in trade. RIL 1.3% lower in today's session. And you have a Bharti Airtel, which is nearly at the day's lowest levels with cuts of around 0.8% coming in there. But an interesting story with BSNL gaining customers over the last 3 months. But moving on, let's quickly move to the next query. We have Varun from Ahmedabad. He wants to know the long-term view with regards to where IDFC Bank goes. He has, I think you just spoke about IDFC, right, over here? Yeah, so he has around 1,117 shares at 57.36. Again, Kush, let me come to you. What's your quick view on IDFC?
Again, wouldn't be, contrary to what Samir has already mentioned, wouldn't be my top pick, in this space. But, if you've got a position for a while now, you could continue to hold. For me, a positional stop on this one comes in close to 58 levels. And, on the upside, the stock has room immediately to about 67 levels. And once that is taken out, perhaps, even a 72. So from a trading standpoint, you could perhaps play for a bounce. But as I said, wouldn't be my first pick from the banking space.
The next question, we don't have the name of the viewer, but his or her question is on Divis Lab, and they want to know whether it's the right time to enter Divis Lab from a long-term perspective. Samir, your view on this particular counter?
So, the business growth opportunity for them continues to remain strong, especially with Donald Trump coming into play, where they're going to be putting certain restrictions on, or not, but putting certain taxes on goods coming in from China. So Divis would definitely be one of the big beneficiaries, given they are a large API manufacturing company within India. But where we find difficulty in Divis Lab is purely on the valuations. So I think a lot of the upside is already factored in. I think the stock is trading near its lifetime highs. I would not be, as much as I like the company and the growth business opportunities, the valuation deters me. So at this point, I would not buy. I'd say wait for correction. And I'm not talking of small corrections. I'm talking of a 10 to 15% again correction. So maybe closer to the 4,800 levels if we see Divis, maybe that time we could probably consider a buy. But of course, you have to review at that point why it's come off to 4,800. Is it because certain restrictions have been put on, or has there been the certain customs duty put on, and even APIs going in from India to the US? So all of those need to be factored in when you eventually buy. But I would look at it at 4,800 and below, not at these levels.
Not at these levels. Valuations are expensive for a Divis Laboratories. Samir, staying with you, how are you looking at a Sagility India IPO? The question is from Manoj from Mumbai. He's bought 1,000 at 30 rupees. Currently, the stock is trading at around 28, if I'm not mistaken. What would you advise?
Sorry, no coverage on this one.
So no coverage on a Sagility. Kush, would you want to come in? I know it's too early to look at any of the charts, but would you want to come in on this one?
With all the fundamental data, if Samir has no view with 5 candles, I don't know if I can. No, sorry, very limited data for any kind of review, so I'll have to skip this one.
All right, moving on to the next query then. Hariharan from Bangalore needs a long-term view on Mrs. Bector Foods. Samir, do you have coverage on this particular counter?
Yes, we do. And again, good business, given the fact where they operate, who they supply to, which are the large QSR chains. Of course, they also have a direct to consumer business. But we believe that all these things put into place, valuations just don't justify where the stock is trading. So as much as like I said, again, the business, I would like to see a deep correction before we can say buy into it where valuation comfort will come in. So at this point of time, it's an avoid for me.
Avoid on Mrs. Bector's. Saying with a similar space, you have a Varon Beverages. Alok Mohapatra from Hyderabad has 1,270 shares, which he had bought at 299. The stock is almost doubled from there. What should he do now? Samir, your view.
So long-term growth still looks good for Varon Beverages. They're still expanding the capacities. Um, we believe that the bottling business will continue to grow. Apart from that, they're looking at a QIP also, I believe, which will allow them to raise some capital for further growth. So on all those parameters, I think Varon Beverages looks all right. But again, valuations, slight discomfort, corrections closer to 520, 540 would be attractive buying opportunity, but not at this point in time.
Kush, with you on a Varun Beverages, though, I mean, the stock has seen some smart returns over the last couple of years, but last 1 year, it's been a slight bumpy ride. Gains are around 50% as compared to the previous years. What would you advise?
So I'm glad you put that in context, but just to dial back the clock a little bit. I mean, if you see over the last perhaps 2 years, the stock's gone from what 100 rupees to 600. So in that scheme of things, if you see the kind of moves that we've seen over the last few months, it's just perhaps consolidation in what is a long-term good story, great story, perhaps, right? So for me also, Varun Beverages is a hold. In fact, any dip that comes about, in the stock closer to 600 levels, perhaps 590 levels should actually be taken as an opportunity to add more. So fairly bullish on Varun Beverages. Positional stop, however, comes close to 560 odd levels, and those are the near-term lows that the stock has made. So any breach below that should perhaps negate the near-term trend. But up until that is held, I think the stock can be held. If you've got a position, or even consider adding at current levels and dips closer to 600.
All right. The next question is from, we have Badri from Bengaluru. He's saying that quick commerce is growing fast, but Nykaa is going down. Is it a good time to enter Nykaa, or should he stick to Zomato or Swiggy? Samir, I'll come to you on this one. Your view on all of these three counters?
So you can't compare Nykaa to a Zomato and Swiggy, right? So Nykaa owns some of their own brands. And I believe, some of these businesses where you have ownership stake in these brands, and as these brands grow in size, you can actually monetize them and create a lot of value for us. Nykaa is something we do like from a long-term perspective. Yes, valuations are not cheap, but why we like it, even though valuations are not cheap, is the operating leverage for this business is very good. As we see the consumer spends continually increase in the fashion space, discretionary spends come back, operating leverages will come through, and then the profitability will grow. Nykaa's constantly launching new products, new brands, and increasing their base. But where we believe there's a little difficulty, the competitive intensity is continuously increasing. So just to put into context, in the makeup space, you have companies like a Westside getting in. You have Amazon that has tied up with Indian companies to create brands of their own, which they will start selling on the Amazon platform where they have a tie. So competition, though, is continuously increasing in that space. But I believe Nykaa is well placed. They have a decent share. And as the depth keeps increasing, we will see the profit will come back. So we are positive. Coming to Zomato and Swiggy. So Zomato, great business. The quick commerce space is also seeing more traction, which will continue to, once they come into profitability, the overall profitability of Zomato will increase, operating leverages will come through further. Again, platform-based businesses, which will do well. But in the near term, I think the stock has probably run up quite a bit and needs to go through a period of consolidation. Once it consolidates, either a time-based or a price correction, we will look at it. Swiggy is trading at a slightly cheaper valuation compared to a Zomato, but that is also because Swiggy doesn't have the market leadership either in the food delivery or the quick commerce space. But what will happen as they continue to grow, you will see the EBITDA starting to turn positive and the profitability coming through. And as that also happens, I think Swiggy could probably re-rate a little bit. The discount between Swiggy and Zomato right at the moment is quite large. That discount could narrow from 50% on valuation to probably 30%. And that we believe Swiggy at this point is a buy. Let me also put in a disclaimer. I am invested in Swiggy at this point of time because I do believe that the valuations are attractive compared to a Zomato.
Right, so that's with regards to Swiggy and Zomato. The next query is on a Siemens. I don't have the name of the viewer, but should it be a good long-term bet from here on? Kush, what would the charts read right now? Because a good upside that has come in from, say, in the last 1 year actually.
Well, not a bad setup. Not a bad setup, especially in the context of how well the stock has done. In 2023 now again, gone into a bit of a consolidation mode. So I think this can be considered from a medium to a long-term perspective. Also, if you see, if I look at it on a weekly basis, then there has been a good delivery marking on this stock, especially on the way up. If you see, whenever the stock has ended in green, you'll find a very healthy tick on the volume charts also, which is also a very healthy sign. Now, from a levels perspective, I think 6,400 is a very strong support zone that should be held in the near term. If that is broken, that could negate the current trend. And on the way up, you're looking at a 7,200, and once that is taken out, even a 7,700 as the target. So Siemens can be considered as a buying or an investing opportunity from a near term perspective. You're looking at 6,400 as the stop loss on this one.
Right, so that's the view coming in on Siemens. With that, we'll now dive into the rapid fire round. Samir, Kush, both of you are aware about this, but those who are not aware, for the next 2 minutes, we will try to get as many queries as possible answered. So I request Kush and Samir, both of you, to keep your answers as short as possible. The first question is on Ramco Cements. Shiva from Hyderabad, he's asking whether he should have a near-term highest target. Kush, I'll come to you on this one.
Continue to hold. The target on this one is 930 and a 945. Stop loss on this one comes in just below 900, 895.
Right. This is a question coming in from Kalyani from Hyderabad. Samir, should she buy NMDC at present rate?
No, I think one can hold it, but wait for corrections to buy.
All right, 1,000 shares of Suzlon bought at 63 a piece by Nitesh. Thinking of holding, will it be a multi-bagger is the question. Samir, your view on Suzlon?
Multi-bagger, no, but there is good upside over the next 2 years.
Right. Hold on Suzlon. 600 shares bought of Rain Industries by Rema from Bangalore at 170. That's the average. Should she exit or hold Kush?
I'll give you a stop loss, 140. If that is broken, you should exit.
Narendra from Vijayawada wants to have a view on Dixon. Kush, quickly, your view on Dixon?
Similar space as Keynes, fairly positive on this one. Targets are 16,000 on the upside and 16,700. And, a stop loss on this one comes close to 14,500.
A question on Vishnu Prakash Pungalia. Intend to purchase Vishnu Prakash Pungalia at today's price. Ready to hold for 3 years. This question is from Rajan Iyer. What should he do, Samir?
No coverage, sorry.
All right. The next question is from Ramesh. He wants to know whether Vodafone Idea will revive in near future. Coach, that's a question that all retailers have. Your view on this?
Haven't been constructive on this one for a while. Still not. So avoid.
All right, the next question is from Anisha, and she wants to know whether it's the right time to enter IRCTC or not from a long-term perspective. Samir, your view?
Wait for deep corrections to buy, not at this price.
All right, the next question is on Medanta. Varun from Ahmedabad has a question on this. Quickly, Kush, your view?
Can consider for a 3 to 6 months perspective. Stop loss 1,010, and on the upside, you're looking at an 1130. And an 1190 as the target.
All right, gentlemen, thank you so much for answering those queries for us at NDTV Profit today. Moving on to some opinion from Rishad Premji, the executive chairman of Wipro, who makes a strong case for regulations in the usage of artificial intelligence and highlights why a work-life balance is important for mental health stability. Here's a slice as we wrap this edition of Ask Profit.
So I think it'll be interesting to see what is the shape and form that regulation takes around AI, especially around ensuring that AI remains safe and within the right ethical framework. But the other thing which I think the government is already playing a very active part, both here in Karnataka as well as more broadly across the country, is just supporting the industry on skilling. And how do you make that easier? And how do you find ways to constantly sort of move further and further back into the value chain? So one of the things we were just discussing is how can you work with universities? For example, we as a company today are already working with a few universities to move back into semester 5 and semester 6 and 7 and 8 to get people to be curating courses that are relevant to industry, to getting them to be working on internships while they are at university, so that they're more and more relevant and day one ready in the context of what the industry needs, in the context of what is job worthy than perhaps what was happening before. So this whole element of skilling and being very agile with it, because the learning will have to be how you can quickly sort of undo something you've put together and build something new that's now relevant in a changing context.
And that requires a close coordination and close partnership between the corporate sector, which is possibly the one absorbing the talent, and perhaps the government in trying to create a framework to produce that kind of
I
a
think
talent.
it requires a huge combination of coordination between government, between companies, between industry and industry associations, and between individuals, right? And all those four stakeholders, I think, will have to work closely to drive this forward. And I think the good news is that's happening. And it's happening on scale, and it'll only get more and more mature as we move forward.
And perhaps one way to bond will be a Priyank Levin cricket team versus a Rishad Levin T20 match.
I will certainly lose that one, but yeah.
So, you know, when we get down to the real aspects of when you move forward, it's innovation and largely the investment in innovation. Often one would say that the Indian mindset is one of imitation, not one of innovation, really in terms of trying to bring in something that's tectonically different from what the rest of the world is seeing, right? For instance, in artificial intelligence, when you look at the research that's done out of India, it's very, very minimal. But the number of Indians doing research on artificial intelligence in countries like the US or in Europe is enormous. How do we break that? How do we change and shift gears from an era of imitation, which has been extraordinarily successful, into an era of genuine, true-blood innovation?
So Veera, I do think it's slowly and steadily changing, right? And I think the biggest ingredient for that slow and steady change is talent on scale, talent with the relevant skills on scale. And so I find that certainly happening with, if you look at the kind of work tech services companies are doing, if you look at the kind of work GCCs are doing in India, they are doing more and more cutting edge work. It's moving away from simply being a scaled execution engine to also an engine that's doing a lot of the thinking and the innovating, right? You look at the innovation coming out on products and platform. Yes, some of the initial thinking may be happening in other parts of the world, but the scaled execution is happening here. And I think that will only move further and further downstream into India. I think the other thing that we can also take huge advantage of is how do we think about the talent that we have in technology here, also for in-country, for-country solutions. And I think that will also mature, you know, our whole indigenous thinking around things like electronics and semiconductors, and that's maturing tremendously both here in the state of Karnataka and beyond. And I think so I'm very hopeful that that thing is very systematically changing. I find the support of government, the policies that are coming in are also very, very actively enabling that.
And what sectors would you, in the world of technology, be bullish on, specifically looking at something that you think is very, very important and something that's going to reap enormous dividends?
No, you know, I mean, certainly AI is very, I mean, we've talked about that, but I'm more excited about the applicability of it, right? So for example, I think there's huge opportunity like we've done with the whole digital public infrastructure space, right? Where we've created the infrastructure and then unleashed the potential of that into the ecosystem. If we can do similar things with the kinds of data sets we have around things like education and healthcare, and then allow the ecosystem to leverage that and build the relevant use cases on top, it can be tremendously, tremendously powerful. I think it also creates a huge amount of opportunity. So I think the one thing we've got to think about as we leverage these technologies is also the job creation opportunity. And the more you unleash and the more you open up things by creating the infrastructure and then opening it up to the ecosystem, I think you can create a tremendous amount of jobs as well, which is always a challenge and always an opportunity in a country like ours.
And that's the key challenge in making the whole growth story socially inclusive. Do you believe that the story so far has been one which is inclusive, or do you believe that there needs to be, and I'm talking socially before we get into just pure corporations and how you go about it, the larger story, how do we make it largely inclusive? Like, for instance, take the story out of Bangalore into the rural parts of India.
This is the story of what?
The story of India, the growth story of India and corporations and the riches that gets accumulated in urban centers. How do we take it beyond?
No, Veera, you look at the tech services industry, for example, and I just look at what the tech services industry has done for the country, right? We employ about 5.5 million people. If you look at the number of surround jobs that it creates about 1:3. So there's been tremendous employment that's created by one industry. I see the same thing happening with the startup ecosystem today, right? The ability for them to create jobs, the ability for them to build brand, and the ability for them to create wealth is going to be the next opportunity of growth. All I'm suggesting is that the more you create, the more you leverage public infrastructure and then unleash its potential into the marketplace, the benefit trickles down all the way to the last mile. And you're seeing that with the whole digital public infrastructure and with the whole, India stack. And so I'm very hopeful that we can do that on the next rung and next run. I'm just using education and healthcare as examples because we're sitting on tremendous amount of data as a country. And if we can leverage that to then unlock the potential of what use cases can be built that serve the last mile, I think they're tremendous opportunities. So I'll give you a very simple example of what we're doing in our foundation. Right? We're doing a fair amount of work in primary health centers, and we're saying to ourselves, look, let's just capture the prescriptions that doctors write down, right? The diagnosis and the prescription. And if we can leverage that to then sort of solve very specific problems, both for patients, but also to make doctors much more impactful. A doctor should not be recommending statin to a woman who's pregnant, as an example. So how can you get them much more refined, but also create huge amount of opportunity to build relevant use cases that can solve very specific real problems?